Kenyans will be forced to dig deeper into their pockets as the cost of living is expected to rise even further as a result of the invasion of Ukraine by Russia. According to economists, the fuel prices that were reviewed yesterday will increase even further in the coming months, with food commodity prices also expected to rise as Kenya imports most of its wheat from Russia. Further to that, the conflict between the two nations has strengthened the dollar, meaning that Kenya will have to pay more on its debt obligations as 55% of the country's debt is dollar denominated. Faisal Ahmed explains.
With the Russia-Ukraine conflict continuing thousands of kilometers away, Kenyans may soon start feeling the effects, with fuel prices in the country expected to go to unprecedented levels as several Western nations begin a boycott of Russia and its products.
Because he kept on warning them.
According to international relations and trade expert Professor Macharia Munene, the global economy is already feeling the strain as the increase of oil prices will impact the manufacturing sector.
It will affect the manufacturing industry, the little manufacturing that we have in Kenya, which depend on oil, because the price will go up. It will affect day-to-day operation, goods and services, and foodstuffs, especially the ones that look as if they are for people who live in towns.
Russia produces a fifth of the world's wheat, and Kenya is one of its biggest importers. And with the war ongoing, this is expected to impact the price of commodities such as bread in the country.
So people should be ready for that. The bread, the loaf of bread, 400 grams that people buy at 55 or 60 shillings, are expected to go to 80 or 100 shillings. Not today, but very soon.
Wheat and grains is also another thing. Russia and Ukraine account for a fifth of the world's wheat exports, so to speak. So it's not necessarily what we're exporting directly from Russia, it's what is happening to global wheat prices globally.
Further, Kenya is looking at higher debt repayment and cost of living as the shilling remains vulnerable to the US dollar, which is gaining from the Russia-Ukraine war, with more than 55% of the country's debt being dollar denominated.
The uncertainty from the war, you find everyone shifts towards the dollar as a safe haven currency. So the US dollar starts to strengthen. Now, the US dollar strengthening globally means the Kenya shilling loses value. Kenya shilling loses value, again, just compounds the costs of the things that we're bringing in. But in our case, we're close to 52% of our national debt is denominated in dollars.
Russia is the fourth biggest buyer of Kenyan tea, having taken produce worth 6.2 billion shillings in the last 11 months to November 2021.
Those who depend on exports, the cash crops, to prepare for tight times, is because the goods, the commodities are not being delivered where they should be. So if we normally export a lot of tea to Russia and Ukraine, and the vessels carrying the tea are not going there because the ports have been closed, and they are closed not so much because the government in Russia or Ukraine said close them, it's because the owners of the vessels are scared.
In October 2019, President Uhuru Kenyatta led a delegation to Sochi, Russia, to discuss trade opportunities between the two countries, which is in favor of Russia by more than 10 billion shillings, according to the Kenya National Bureau of Statistics. Faisal Ahmed, Citizen